Welcome to the course, the 3 simple steps to mastering credit analysis from scratch. In this program, we are going to experience basic training for credit analysis. This program is designed to be a complete training to start you doing actual credit reports, and we are going to cover all of the elements from the beginning. We are going to start with introduction of credit analysis, giving you an overview of the industry, what it really is about. Then, we will get our hands dirty learning the technical aspects of credit analysis. We are also going to learn about choosing which credit matrix are the most important ones to look at. We are going to learn how to structure credit analysis work so that it is applicable in the real world. We are going to learn where to find information to help us do our analysis. So, we are really going to get a complete basic package for doing credit analysis. Now, what you are going to get out of the program will be what you are willing to put into it. My name is Morgan, and my partner Lucas. What we are teaching works. We have been using this stuff in our everyday jobs. So the content in this program is not on trial. It is the direct translation from the jobs of being credit analysts ourselves. To get the most out of this course, you need to also be at 100%. Cell system. The program has been carefully designed to be fully practical and not to over-focus on theory. We want to bring you through step by step on how to conduct credit analysis. Be able to do so confidently even if you have zero background on credit, banking, and finance. At the end of the program, you would be able to independently do credit analysis work, write credit reports, and attend interviews for credit analyst jobs. We have our very own cell system that will guide us through the entire course. This system is a distillation of our experiences on what matters most in credit analysis. The C in the cell system stands for the C-squared framework. E stands for earnings. L stands for liquidity. And the last L stands for leverage. Any good credit analysis work would have to incorporate this cell system, giving both breadth and depth to your analysis. There would be plenty of actual case studies, and we are giving you 10 free sample credit reports together with the course. These 10 free reports are worth at least $10,000 because that is the market price charged for such reports. We know the value and importance of such reports, and they would be a great boost to your learning, which is why we are giving it to you absolutely free. The aim of these free reports would be to demonstrate and provide a template, giving you a flavor of the language used in credit analysis. It is not aimed at being mathematically correct, which is not within the scope of this course. Both of us have struggled initially before entering the finance industry, as access to such reports are extremely restricted. Friends who are working in similar roles, they do not feel comfortable sharing the actual reports, and therefore, such reports are extremely hard to come by. We hope that you can treat these reports as confidential so that others who want to learn can benefit when they go through the course. Otherwise, the reports could result in more doubts without going through the relevant training and cause confusion to someone new and untrained. The C in the cell system would focus more on the qualitative aspects of credit analysis, while the remaining ELL would be focused on the quantitative aspects. We have deliberately customized this system to speed up the learning process. I would be covering mostly the qualitative parts, while Lucas would be sharing the quantitative parts of financial analysis, financial ratios, how to interpret them, and more. This is because credit analysis is much more than figures. It is also not about accounting, neither is it about complex mathematical models. To extract the most value out of this course, it is best to learn with your cup empty, as we share with you our experiences gathered from thousands of reports that we have written and helped companies avoid millions of dollars in potential losses. What do you want to get out of this course? Ask yourself this question. What do you expect to live with after you have completed this course? Now, some people may say that I want to be able to make $10,000 a month to get a job in JP Morgan. Well, that sounds good. But what do you realistically want? If I were to challenge you to narrow it down to one thing, what is that specific outcome of this program? Be as specific as possible. Pause the video and take a minute or two to think about it. The next thing I want you to do is to empty your mind, your thoughts, your past impressions about what the finance industry, your conceived notions about what credit analysis is, your fears about how scary it is because you have heard about it from your friends. I want you to take all of such thoughts, put them all into a sack, tie up the sack and throw it away. The reason is that these thoughts are just going to hinder your progress, slow you down. You may be wasting time thinking why it is different from what you originally thought it was, so on and so forth. I say this is because I started my credit journey with some baggage, and it was only when I decided to dump those away that I started to see major leaps in my understanding of credit analysis. So come into the course with an open mind, be ready to learn. Reduce your distraction to the minimum to get the most out of this course. Be clear on the outcomes, no distractions. I would like to share my story with you. How I got into credit analysis and why I enjoy what I'm doing. I started my career quite unconventionally. Most people who enter into credit analysis or credit risk, as some would call it, they would do so after going to college by joining a bank or after joining an accounting firm. I started my career in real estate, dealing with tenancy matters. And then I decided that that was not something that I wanted. And you could say that it was by a stroke of luck that I first became a credit analyst. It was a junior role where I learned the ropes from scratch, being tutored one-on-one daily by my manager, going through each section of the credit report painstakingly, making amendments, learning about the industry intricacies, and I have absolutely no idea what I was doing at the start. There, I learned about credit analysis for the shipping and commodities industry in one of the 3 largest credit rating agencies, before moving on to work in a financial institution to do credit analysis for companies in general, or what most people call them as fanciful term, general corporates. As you can see now, that I certainly did not begin my journey as a credit analyst with the same route that most people have, but that also meant that I got a very varied view of the credit work. At this point, most people would probably be surprised that companies outside of banks do credit analysis, and this phenomenon is actually more common than what many would think. And now I can do credit analysis quickly across various industries, across various countries, different company sizes ranging from small enterprises to public listed companies. And my co-partner here, Lucas, who will be teaching the second half of the course, he's from a different background. He has done general corporates credit analysis, banks, non-banks financial institutions. He can even do modeling. He has worked in a bank having extremely in-depth knowledge of banking systems of various countries including China and India. He is also very thorough in his analysis. And together, we complement each other and we are able to bring you different aspects of credit analysis from different standpoints that would otherwise taken someone 15 to 20 years to learn and experiment. So this course is really going to shorten the learning curve tremendously. We are only going to give you the very best stuff. We are going to give you as much information as you need to write a credit report, to do proper analysis that we can possibly squeeze into this program. Why do I say proper analysis? Well, what we have found from interviewing with credit analysts from huge banks, insurance companies and so on, reading through the case studies that potential job candidates have written and submitted to us is a shock. There is a profound lack of analysis in the reports. What makes a good piece of report is the depth of analysis, discussing about the consequences, incorporating opinions of what could happen, in the future, say the next 12 months, and justifying that based on financial statements, state of the economy, the outlook for the industry, so on and so forth. Most reports simply end up stating obvious facts like revenues went up, debt went down, and this is what I call the converting figures to English syndrome. There are many reasons for this. The training that most people receive are to serve internal customers, so they often have very specific templates that perhaps the management wants to see. What I have gathered from writing reports viewed by thousands of companies is a clear idea of what is important, especially when each report can easily cost hundreds to thousands of dollars. Therefore, in this course, we will give you a framework so that you can avoid the converting figures to English syndrome and write reports that people would appreciate the depth and breadth of your thought process. This is so that your readers walk away feeling that they have learned something new each time that they read your report. And that's what Lucas and I want to empower you with. Why learning about credit analysis is important, and is even more important right now with the recession from the COVID-19 pandemic. Learning about credit analysis is definitely one of the most important skills to pick up. You can apply to jobs as credit analysts. You will learn about analyzing financial statements. It can even be applied in investing for your own portfolio in the stock market. In other words, you get to the very foundation of modern-day banking and finance. For instance, before a company can get a loan from the bank, it needs to have its credit profile analyzed to know whether it is credit-worthy of a loan. When you see on the news about the bankruptcy of companies like Lehman Brothers, you can understand what leads to a company to collapse overnight. And better still, you will be able to spot the telltale signs months or even a year prior to the collapse. Credit analysis is an important skill set. It is something that is highly applicable in our everyday lives, and it is not about abstract concepts or definitions. With the COVID-19 pandemic, it means that more companies are likely to be suffering from the negative effects of the global recession. This means that with less business deals, companies will start to face issues with repaying their debt, paying for the goods and services that they purchased on credit. The role of credit analysis becomes all the more important in a poor economic climate, as it becomes increasingly hard to spot the lemons among clients. There is much more uncertainty, and more companies is likely to default on paying their creditors. How is this course different? This course will be breaking down all the complex financial concepts into simple layman terms, breaking down all the complexities of credit and debt. Let's face it, the finance industry is filled with all kinds of jargon, which can be rather scary to many people. Even the term credit itself can be intimidating, but the finance industry does not have to be in this way. Therefore, what we will do in this course is to break down all the imaginary barriers and bring you the very bare bones of what credit analysis is. No fluff, no long tedious theoretical explanations. I know that you are here because you want to cut to the chase and get right down to credit analysis. We will do just that in this course. We are not going to be repeating boring textbook stuff, but real-life applications. The real deal that are used in credit work. I am sure you will find the experience different from the conventional schools and textbooks, which means that you can instantly jump into a credit job, write a proper credit report. To make things come alive and stay rooted in reality, we will have loads of case studies, examples, and exercises throughout the course. Companies and financial statements will be actual copies. The course has been designed to summarize the entire credit analysis process into the SELF framework, which consists of just 3 simple steps. This method was developed by us to serve the very purpose of simplifying the entire process, guide your train of thoughts, and still remain extremely relevant in the workplace. Lucas and I, we have known each other while working for one of the largest companies in the world with a combined experience in credit analysis of 15 years. Credit analysis is not something that is exclusive only to the banking and finance industry. I have experience as a credit analyst covering commodities and shipping, which I have mentioned earlier. And Lucas' expertise, on the other hand, would be credit analysis in banks, non-banking financial institutions, such as insurance companies. Together, I feel that we work very well as a team to cover a rather diverse set of companies that heavily require credit analysis work. One of the underlying themes in credit analysis is about evaluating risk, specifically credit risk or default risk with clients. There are other risks such as legal risk, which is something that lawyers do, or fraud risk. This is also not a compliance cost, and I know that some companies would mix the role of a credit risk together with compliance roles, together with regulatory collections, payments roles, and more. Of course, companies have the freedom on how they wish to define their credit risk jobs. That, strictly speaking, is beyond the original intent for our course, or for credit analysis for that matter. Companies would sometimes lump these roles together to cut cost, saving headcount for additional manpower. Therefore, do be aware of such differences by companies on their definitions of credit. When we look at financial statements in this course, they will come from a variety of countries to let you have more exposure to different ones across the world. Most commonly, in this course, we will use statements from the US, UK, and Japan. This is to give you an understanding of how financial statements are rather similar in developed countries as they follow international accounting standards. Doing so will also build up your confidence when you know that financial statements are not a unique format just for one country, but once you learn how to read a financial statement, you generally have the ability to analyze financial statements from different countries.